What's up, guys? So you want to know about PMI. Well, this is exactly where you should be. In this video, I'm going to be teaching you exactly what PMI is and how to avoid PMI in several different ways. Let's get into it. Whenever you're putting less than 20% down on a property, the bank is going to charge you PMI, and PMI stands for Private Mortgage Insurance. In a nutshell, banks are going to be charging you PMI because it's just their way of making them feel more comfortable lending you an amount of money. The amount you're going to be paying for PMI varies between about 0.5% and 2% of the remaining principal balance. And the percentage is very personal to your situation. So what your credit score is, how much of a down payment you put down, and what the loan terms are for that loan. So let's do some quick math so I can show you exactly how much you're going to be paying for PMI. Let's say you're buying a property for $100,000 and you're going to be utilizing one of the first-time home buyers loan programs, which you can put down 3.5 to 5% down on this property. PMI doesn't just apply to primary residence. This applies to also investment properties, but I'm just using a primary residence as an example. Let's say for that $100,000 property, you put down 3.5% down on a FHA loan, which is $3,500. And let's say the bank gives you a 2% rate on your PMI. So we're going to take the $3,500, what you're putting down minus that from the $100,000. Now you're left with $96,500. Now you're going to take that $96,500 and multiply that by 2%, your PMI rate. You're going to end up with $1,800, and that's just for the entire year. So you're going to be dividing that by 12, and you're going to end up with roughly $150. That money, that $150, is going to be tacked onto your monthly mortgage. So say, principal, interest, taxes, insurance, all equals up to, let's say, $600. Well, now you're going to be paying an additional $150, so you're going to be paying $750 rather than $600 because PMI is attached to that mortgage. And go ahead and hit that like button, turn it blue so the YouTube gods can also avoid PMI. Now that I've scared you with the additional monthly payments, let's get into some ways to avoid PMI. Something that I just recently learned is something called a piggyback mortgage, or also known as the 80-10-10 rule. Meaning the bank will put up 80% of the purchase price, you put up 10% of the purchase price, then there's going to be another lender involved that is putting up another 10%. Typically, the other lender that is lending up the 10% is going to be a higher interest rate than what the bank that's going to be lending out the 80%. So let's say you get an interest rate of 3.5% for the bank that's going to be lending the 80% down. So possibly that the secondary lender is going to be charging you maybe 5-6% on the 10% that they're putting down. You might be asking yourself, why would I do that? Why would I give someone a higher interest rate to just loan me this 10%? I'll just pay the PMI. Well, think about this. So you'll be paying PMI. PMI does absolutely nothing for the borrower. That money goes straight to the bank. It doesn't go towards principal. It doesn't go towards interest. That just goes straight into the bank's pocket. Now, if you have a secondary loan with another bank, that money is basically going towards equity. Yes, you're going to be paying a higher interest rate, but some of that money is going to be going towards equity. So this is why I want you to do this rather than paying PMI. And with the 80-10-10 rule, you're putting up 20% or over on this property. Yes, the other 10% is coming from another person, but you're paying over that 20% threshold for PMI. So you're already eliminating that PMI that's from the bank. And you can use the 80-10-10 rule with investment properties as well. So technically, you only have to put up 10%. If you're buying a $200,000 home, put up $20,000. If you're buying a $100,000 home, you're only putting up $10,000. You're just finding another lender to lend you that money. Before we get into the second way of avoiding PMI, go ahead and consider subscribing to the YouTube channel and click on the bell notification to get notified every single time I upload a new video just like this one. So here is the other way to avoid PMI. Let's say you put 15% down on a $100,000 property home. So you are putting down $15,000. So obviously you're going to be paying PMI, and if you don't want to utilize the 80-10-10 rule, here is another way. Let's say you buy the property for 15% down, and then let's say the next day, the next month, the next 6 months, you inherit $10,000. Now you want to put that $10,000 towards your principal, and you can lower your monthly payments and avoid PMI. All you do is you would need to call up your bank and tell them you want to put $10,000 towards the principal balance, and you want to do a loan recast after that. So all the bank is going to do is basically take that $10,000, and it kind of acts as another down payment additionally to the $15,000 you already put down. So now if you think about it, you put down 15%, and then now you're putting down another 10%. That's basically 25% down on this property. So you're exceeding that 20% threshold for PMI. So you just eliminated that right there. And additionally, putting down that an additional $10,000, you're essentially lowering your monthly payments as well. So if you're using this as an investment property, your cash flow just increased. If you're using this as a primary residence, your savings account just got an additional $100 every single month if you're being smart with your money. Most banks will allow a loan recast, but call your bank to make sure that they can do this type of program. And if you want to know my top 5 real estate investing books, a link to that is going to be in the description down below, so go check out those books. If you can avoid PMI, please do it, but if you can't, it's not the end of the world. For example, my very first investment property, I was paying PMI. I only put down 15% on my investment property. And so I was paying about $40 every single month towards PMI. Now, that didn't affect my cash flow very much because it's $40, really. I was paying about $40 a month for PMI. Now, that's not a lot, but that's money I'm not seeing a return on. Just to reiterate, this money goes into the bank's pockets. As of 2017, you cannot write off your PMI payment. So again, it goes directly into the bank's pockets. If you like keeping money in your own pocket, hit that like button. But there's going to be a video popping up right here that I picked out specifically for you, and I really think you're going to enjoy it. So click on that video. But until next video, guys, I'm out. See ya.